Bank of China says ample liquidity in China has caused bubbles in stocks, commodities, and property. The bank led the nation's record lending spree of more than $1.1 trillion in the first half. Stephen Angle talked to Bank of China's Vice President Zhu Min.
Well, I think the economic recovery in China is going well. You see very strong GDP growth rates, but obviously supported by basic infrastructure investments, which is good. Because currently the crisis is not over yet. I always say that. So we need a strong growth to stabilize the whole thing.
So where do regulators come in and authorities when you have asset price bubbles? Do you see asset price bubbles forming?
Yeah.
At the same time, you don't want to stymie growth.
Yeah, that's also the new challenge now. I would say the risk we're facing today is the corporate sector haven't picked it up yet, which not necessarily being bad news because corporate sector finishes the inventory cycle. They are looking for the future, so wondering where to go. It's not all clear yet because, as I said, the crisis is not over yet. Mm-hmm. But meanwhile, the real issue, so that's the reason the inventory investments are important to continuously support the growth. But meanwhile, the real potential risk is that a lot of liquidity goes to, because there's ample liquidity in the market, it goes to the assets market. So you see the assets bubble there, commodities, the stock, and the real estate. It's not only in China, it's everywhere. The funny thing is, if you go to Wall Street, the people feel the crisis never happened. I think it's just very, very weird. And it is give the central bankers very challenging, difficult time because you cannot raise interest rates. If you raise interest rates, you hurt the real sector, right? But if you don't raise interest rates, as liquidity goes to the assets market, pump up or the bubbles.
So what other tools are at their disposal? We've already seen the CBRC maybe, increase reserve ratio requirements at banks. Perhaps there's some directives coming down to slow lending in the second half. Second half tends to be slower in lending anyway, front-loaded in the first half of the year. What are you seeing as far as your loan portfolio in the second half of the year? Will the record lending slow?
As everybody sees, the first 6 months, the banking have a very strong loan growth. I think which is good, though, because a lot of loans goes to the infrastructure investments, goes to very good projects.
A lot of it's gone to the stock market, though, and to forming the asset bubbles.
Not necessarily. The key issues you have to understand, in the first 6 months, demand for loans is very strong. Because you recall in 2008, China still more or less under very tight monetary scenarios. So a lot of good projects has no money and waiting in the pipeline. So now suddenly, given to the crisis, and they jump out. Then we have this year's projects, and even for next year's project, because the situations, they speed up to the preparational phase and jump out. So a lot of good projects, so that they need the money. I think the key issues, as long as the money goes to the real projects, things should be okay. Because you have to see that China maybe one of the few countries still have a lot of room for the infrastructure investments.